position to take advantage of that. And that's the journey that we've been on. And
it's a 5G future for Telstra CEO Andy Penn, continuing to push that barrow as shares soar on the back of the company's full-year results today. We'll hear more from that interview a little bit later in the program. And apart from reporting season, perhaps a bit of relief coming through in the US-China trade spat. The two countries will be holding trade talks later this month. So the background to the local market performance today was a negative session in the U.S. We did see the S&P 500 off by around 0.75%. Some tech stocks weighing 10 cents as well, surprising the market, and that really weighing on emerging markets as well. But today, a bit of a push higher for S&P 500 E-mini futures. And yeah, it's nice to see some green on the screen there. Yesterday, the local market hitting decade highs. To talk us through it all, John Milroy from Ord Minnett, Nick Garling from Crooked River Capital. Welcome, guys. Good to see you.
Thanks.
Nick, I'll start with you because it just appears as if, and more evidence today, that this local market, just wants to push higher and not afraid of going its own way.
Yeah, it's like the little engine that could, isn't it? I think I heard somebody in the last couple of days say that it's broken through and there's going to be a lot of momentum. I'm not quite sure we're there yet, but I do like days where it gaps down and basically starts to move up, and we've finished just about on the highs of the day. So all in all, a good performance. QBE very strong. Some buying in Telstra, probably short covering, John, I would have thought.
A little bit. Yeah, maybe a bit of perhaps some potential for some upgrades across the market, maybe following through from notes tomorrow, you would expect.
You've had a busy day going through all the reports.
Yeah, we've had plenty across the desk today.
Yeah, what was the real standout to you, John?
Yeah, I think Telstra is probably a good place to start. It's probably a bit less worse than the market expected. Certainly the headline, it was a pretty good outcome. Some of those ads are good, but it's pretty messy all the same. And I think Nick's absolutely right. There was certainly some short covering. It's had a hell of a run since 242, hasn't it?
It's concerning the costs side of Telstra. Like if you look at global telcos, I think I read an article, there's been similar articles around. They're just not cutting costs like some of the global competitors are, like Vodafone and I think British Telecom significantly have pared back their costs over the last 5-10 years. Telstra hasn't. Telstra's cost base keeps expanding, and it's a real problem because where's the income going to come from? And, he's talking about 5G, very topical right now. He's got to talk about it, I guess.
Yeah.
If they can get that strategy right, well, great, but...
Yeah, it's a longer-term idea for them, of course.
Well, and there is real competition in the marketplace, and you have to think about pricing and margins and everything else, which is coming under pressure. Let's bring in Ben Brun, joining us from the Australian Stock Report, into the conversation. He's live in our CBD studio. What was there to love in the Telstra result, if anything, Ben?
You're probably speaking to the wrong person, Nadine. I didn't think there was a lot to like. Well, I tell you what there was to like, why the market liked it is because it was coming off such an incredibly low base, and it was priced for oblivion. It was priced for another dividend cut and maybe for earnings not to be as strong as they were. But earnings are going backwards, the dividend's going backwards, and the outlook was very challenging in their own words. So, it was probably just overdue for a bounce. Maybe that's the nicest thing that you could say about it. But it's such a saturated, mature market here in Australia. It's hard to get excited about any telco whatsoever. So hard, in fact, we're actually shopping. If you really want a telco, we're actually looking at Spark in New Zealand. That's how much competition there is here in Australia. It's been all one-way traffic. This is the anniversary. Today's the anniversary of that dog day afternoon that it had when it slashed its dividend this time last year. It's just been all one-way traffic to the downside. So I didn't find many positive takeaways. They've got this Telstra 2022. That's one for the true believers, I guess. But, in terms of positive takeaways, I think it was just overdue for a bounce, I'm afraid.
You can see there at 5.8%. So yeah, commentator earlier today, John, saying it's value buying that you're seeing in Telstra right now.
Yeah, it probably
could be still a value trap, couldn't it?
Well, it's certainly well underheld. You have to say that across the market. I'm sure Nick would agree. It's been well sold, as Ben rightly says. The anniversary, but the market has pushed higher. The resources have pushed higher. The banks are finding some bids as well, and the market's probably looking around for places to deploy cash. And sure, short covering, but it has been hit hard, and maybe that's a place where money is going.
Okay, Telstra, we'll hear from the CEO, more from the CEO, Andy Penn, a little bit later on. Talk to us about QBE, Ben. You had your eye on this one. So again, it's one of those companies that I suppose outperformed, came in better than expected. Others would say it just didn't disappoint. However, the premium rate momentum was pretty strong. So does that speak volumes about continued, I guess, improvements in underlying margins as we go forward?
It possibly can, but of course it's one catastrophe or disaster away from being priced back into single digits. Now, I'm fully expecting QBE to have an 11 handle tomorrow and maybe even a 12 handle in the foreseeable future, only because it is priced at such a discount to its global peers because it's disappointed so many times. So, look, the numbers were pretty good, and I guess, they've de-risked the portfolio. The new CEO has simplified the business, so that's been pretty good. They've delivered on the combined operating ratios. Again, I've said that in the past that QBE is the sleeping giant of the Australian stock market, but in the same breath, as much as I think that it could have a little pop, I have it as a trading stock. No longer can you put QBE in the bottom drawer and just forget about it. You're always looking out your window. You're always looking for a global catastrophe because you know that that's the time when you've really got to part company with the stock and maybe even turn your long position into a short position. So, look, it was nice. They've delivered so far in the first half. I think they've set themselves up very nicely for a second half, but I can't re-emphasise enough, pricing risk is near on impossible. I don't care who you are. You just can't do it. No one can price risk effectively, and that's why insurers, not just QBE, but they are a very dicey proposition, albeit I think there's certainly wriggle room for a re-rating to the upside on the back of this result today.
IAG popping 3% today after a pretty terrible day yesterday in the wake of its result. Just it touches upon a theme I think that you brought up, Ben. Is there a place in every portfolio for insurers, Nick, or do you sort of view them like Ben, that they're just one disaster away from
Personally, I play that whole sector from the short side. It's not a buy and hold sector for me. I take a pretty keen interest in IAG because I know some of the management, but it's not a sector that you can fall in love with. Ben hit the nose on the head. You cannot price risk, and the irony is that one of the reasons they're so successful is their clients don't understand how to price risk either. So whatever premium that they come up with, people just swallow. That's one of the great benefits of the insurance industry. But certainly, it's an overused word these days, headwinds. But with the Royal Commission coming up now, I would have thought you'd be very careful in this sector at the minute.
But we started out the year sort of talking about tailwinds for QBE coming through, the bond market and rising yields. So why aren't we discussing that anymore?
Well, I think because it takes so long for it to come and affect their book, because they have such a long tail in their investment portfolio, Nadine. So yes, while you're seeing the US 10 years tick up a bit, and that's certainly going to be an improvement for them in the out years, it's hard to see that reflected in the next couple of years where the markets are really looking. So for us, it's Suncorp is our pick. The bank side and the insurance side is our preference.
Why? Because it has that banking exposure as well?
Partly that, but they're also benefiting from some of those increased rate rises and premiums as well that we've been talking about, and that is something that certainly benefits them across their portfolio. General insurance is our preference.
Mm-hmm. Ben, I've been asking everybody just because, we talk about the big names, we talk about the Telstras, the QBEs. What were some of the smaller reports that were out today? Or name one that sort of caught your attention and perhaps even inspired you.
Well, inspired me. There was a one negative one today that certainly didn't inspire us at all.
Inspired you to sell, perhaps. Talk to it.
Well, there was a couple that we've been watching on Treasury Wines and Invocare. So that was. I guess that's the problem when some of these stocks run out of sight on a price to earnings multiple basis. You do set yourself up for a little bit of a fall in a completely the opposite vein to how Telstra has. So, there's so many reports to take stock of. We kind of get lost in terms of the little ones. We know we were talking about baby.
Well, we had GWA today. We did have Invocare, 50% fall in first half net profit. We had Sonic, we had Downer, we had Estia. Origin was out today. Nick Scali is one that a few people have been, talking about favourably. Beacon Lighting, Oz Minerals. What was your sort of report of the day?
Yeah, I think it was actually released yesterday afternoon. That's Service Stream, Nadine. Certainly it's been a good stock we've been following for a little while as well, and it's certainly a great beneficiary of the NBN rollout. Now, while that has peaked, they have produced a really good result, some really strong cash flow conversion, and set themselves up in terms of executing well across other projects as well. So that's one we really like.
Service stream, okay. We'll keep an eye on that one. I'm not sure how the share price did today. Can't get it up right now. Ben, let's talk market in general because yeah, it looks as if we'll be just finishing flat. I think that's a pretty impressive performance considering some of the early jitters we saw for the 200 today. We've got an intraday chart up there right now. So what do you think was the real turning point? We had jobs released today in the Asian session. We had news that the U.S. and China will be coming back to the table potentially on trade talks. U.S. futures also taking a turn. Where did you see the sort of recovery, or do we look to reporting season?
Well, I think it's a combination of two things. I don't think the jobs data was that important to the Australian share market, to be honest. I mean, it can be a bit of a push-pull number at the best of times and maybe more a factor for the dollar. But obviously our SPY futures said we're going to be down 50 today. My screen lit up like a Christmas tree, a big, like just green arrows everywhere as soon as we got that news about US and China going to the potentially going to the negotiating table. You're right, those US futures, all risk assets, just lit up like a Christmas tree, as I said. So that was important, but what's equally as important is we're getting some of these heavyweight names that are coming in better than expectations. I said that that's what was going to potentially drive us if we're going to stay above 6,300. To my mind, we're in breakout territory now. All things being equal, a strong lead from Wall Street tonight. You know, I think we could be looking at 6,350 as soon as tomorrow. That's how excited I'm getting by some of these earnings reports that have really impressed. So a combination of factors as per usual, but it was nice to erase a 50-point expected loss into what looks like at least another positive day.
Nick, is Ben getting a little excited there about the 200?
Well, I don't think 63.50 is very exciting looking at where we closed today. But look, I think we're at a point where people will be standing back and having a look. And there are people around who will push markets into technical points and look for momentum. I personally would be cautious buying here at the moment. I think there's still enough reasons to be just circumspect. Earnings have been slightly better than usual. I absolutely agree with Ben. He hit the nail on the head. The US and China trade issue is the biggest issue in global markets right now. If there can be some sanguine and information coming out that just wets down that issue a little bit, it's going to be positive for markets. I mean, look at it's slightly off the equities, but look at the way that emerging market currencies have behaved in the last little bit, and emerging markets compared to sort of G7, G10 currencies have been very, very volatile. So it says to me that, look at the lira, for instance, I mean, but they're right across the board. And that says to me it's a risk-on, risk-off situation. So if we get Trump and China coming to the table, it's got to be a positive thing for commodities too, and that will probably support our market.
Well, we've got a commodities cross coming up a little bit later in the piece. We'll talk more about the macro view with Evan Lucas from InvestSmart next. Let's, though, thank Ben Brun. He's gone somewhere into the ether. Ben, thank you. We'll see you soon.